Hey guys, so welcome back to another video on TradeNow, and for this video I'll be showing you guys a 1-minute momentum trading strategy that we'll be using only 2 indicators to trade with. And with this trading strategy we'll be having a lot of trading opportunities, so it's very important for you to find an exchange with very low trading fees. So if you guys are interested in trading crypto like me, you can check out the link in the description box below. So the link will bring you to sign up for a FedEx exchange account, so where the exchange has very low fees, and it's personally one of my favorite exchanges to use because there's a lot of tools on the platform. So the fees are as low as 0.019%. If you sign up using the link in the description, you get a free VIP one, and basically every $100 you deposit, you get an extra 5% of your deposit amount. So it's like bonus, and you can profit by just depositing. So $100 will get you $5, $1,000 will get you $50. But obviously the most lucrative is the low fees that the exchange offers, and it's like the lowest amongst all the exchange. So make sure to check out the link in the description box below. So without further ado, let's get right into the strategy. For the strategy, the 2 indicators that we'll be using is your squeeze momentum by Lazy Bear. You can see the first one, and next up is your cumulative delta volume, and this will be your 2 indicators. For this, you're just going to remove the plot and just make it easy. So this strategy is super duper simple, and let me get right into it. So for you to enter a long position, there'll be 2 rules. So first up, it is either the dark red candle changes into a bright green candle, or the dark green candle changes into the bright green candle. And whenever there's a change to a bright green candle, you want to look at the cumulative delta next. So whenever it changes from dark red to bright green or dark green to bright green, you want to look at the cumulative delta volume. If the first candle that changes, let's say right here, let's check it out, you can see that it changes from dark red to bright green. If the candle here is green as well on the CDV indicator, that is a sign to go long. So right here will be a sign to go long, because if we look on the indicator, see that it changes from dark red to bright green. So bright green is basically our signal to go long. Whenever there's a new bright green candle, it means that there's a new momentum shift towards the upside. Next up, you want to look on the CDV, you can see here is green, so that's a valid position. So you're going to put our stop loss right below the recent swing low, so it'll be right here, recent swing low there. You can take a 1.5:1. So that will be a valid position. So same thing, you want to look for a shift of momentum. You can see from here, you're going to look for a shift from red to green. So let's look for it. You can see right here you have a shift from dark red to bright green, and there is a green signal on the CDV indicator, so it's a valid signal to go long here. So you can see that dark red to bright green, so bright green here, and green on the CDV, so go long right there. And you're going to take a 1.5:1. Stop loss right below the recent swing low, so that's a valid position. So let's look for another long position. You're going to wait for change right here. You're going to wait for a change of the dark red into bright green. Here you have a dark red into bright green, but we see on the CDV it is red in color on the candle that it turned bright green, so that's not a valid position. Same thing here, changes from dark green to bright green, but however there's a red candle on the CDV, so not valid. Here we're going to look for another long position right here. Let me see. Here we will have another position. You can see that is dark red to bright green. So, and we have a green signal on CDV, so that's a valid position to enter long. But however, that will end up in a loss, depending on where you put your stop loss. So personally, I will leave some gap so it wouldn't end up as a loss for me, because you don't want to put it directly on your stop swing low, because as you can see, this is an area of kind of support. So you want to leave it some room for it to settle, so you're going to put it slightly below. So depending where I put it, you basically might have been stopped out there. But it would have been basically if I took the trade, I'll give it maybe a bit more room like here, and it would have been a win for me. So yeah, that is quite simple rules for you to go long. Basically, whenever there's the first bright green candle, you want to look for a long position, and you look at the CDV for confirmation. So that is it for the long side. the rules are pretty simple. Now I'm going to show you guys examples for the short side. So the short side is basically the same thing, however it's just the opposite. So whenever the candle changes from dark green into bright red or dark red into bright red, you want to look for a short position. So like right here, let's see, we have a change from dark green to bright red, and how we must look at the CDV indicator. The CDV indicator must be dark red in color, but however we have a change from dark green to bright red here, but the candle is green in color, so not valid position. Now we're going to look right here. You can see that we have a change from dark red into bright red, and the candle is red in color here, so that's a valid position. So your stop loss will be above the recent swing high, which will be right here. You can take 1.5:1, so slightly bigger trade. End up to be a win. So let's look for another position. You're going to wait for it change to bright red again. So right here we kind of have it. You see it's dark red, change to bright red here, and we have a red signal on the CDV, so that is a valid signal to go short. Stop loss above the recent swing high here, and you have a 1.5:1. So it's a valid signal to go short. Same thing, going to look for another bright red signal. Here we have a bright red signal from dark green to bright red, but it's a green signal on CDV, so we do not want to go short there. Here we have a change from dark green into bright red, and CDV indicator is red in color, so that is a valid position. Stop loss will be right above the recent swing high, and you take 1.5:1. So there we have it, another win. So as you can see, there's basically trades to be taken almost every time there's a switch in momentum, and we're just trying to scalp the quick intense moves, and helps a lot if you guys are an active trader. And it's quite a simple strategy to take note. You don't really have to think about the strategy. As long as it fulfills the condition, you will take that position. So anyways, it's important to, maybe you want to add an EMA, you can add an EMA right here. So the EMA, you're going to make it into 200 if you guys want to basically filter out some of the bad trades. So you're going to have a 200 EMA. So maybe when price is above the EMA, you want to take long positions only, and when price is below, you want to take short positions only, and may help you to filter out a lot of the rangy trades. But honestly, with this strategy, if you don't have the EMA, you can take trades in rangy markets as well, and really helps to filter out all of the emotions that you have in trading. So anyways, yeah, that's it for this video. Hopefully you guys enjoyed, and make sure to hit the like and subscribe button, and to check out my other strategy videos as well. So thank you guys for watching, and goodbye.